Yeah. Click. Mic check. Yeah. Region weekly. Deep inundation. Break it down simple. Demystify the system. Demystify deep in. Tap and tuning. Noise online. Yeah, the whole net moving. Bills get passed. Yeah, we track that movement. Region space drop. Alpha prove it. Macro talk, but we still stay winning. Better go up when the crowd start listening. From the chain to the world we bridging. Deep in the connection, yeah, we building. We don't chase hype, we decode systems. Congress floor, yeah, we read legislation. Bills get signed, market shift quick. Policy change, we already on it. CPIs, rate cuts pending. Fed chair talk, got the charts all bending. Infrastructure plays, long-term vision. Deep in those get real permission. Fiber lines run through the...
Oh, hello. How's everyone doing? It is Sunday evening. Got back from ETH Denver last night. And I'll tell you what, man, I actually found it very worthwhile. I know there's some mixed feelings. I've seen different sentiment out there as far as the conference and the turnout. And I'll tell you, I think a lot of it has to do with your expectations and how you used your time out there, frankly. I think certainly attendance was down. Market conditions are pretty awful right now. So the conference itself, I got out of it what I wanted. I was very specific about and intentional about how I used my time there. But man, the networking was amazing. We'll get into all that. But while I was gone, gosh, we had the tariff ruling come down, the Supreme Court ruling, something we talked about a lot. I covered in my streams back in December, especially when we thought the judgment would be coming down. Then it started looking like it might be May or June before we saw an actual ruling on that. Of course, that happened last week. I believe that was on Friday. So markets have reacted to that. Obviously, still a lot of uncertainty there. I'm going to go through the details, what I'm expecting, how I'm playing this. There's also a change in some regulation around stablecoins specifically, and that could bring a lot of new capital into the space. So I'm going to go through those details as well. What my main takeaways were from ETH Denver. And really, there's a few main talking points. There's a lot of what I've been covering, which is pretty excited to kind of see a lot of the speakers talking about a lot of the same things I've been covering, what I've been investing in. So that was awesome, as well as a couple of deep end projects that I was able to connect with out there that I haven't covered to this point. That one has a token launch, the other one does not. So I'm going to talk about those on the show today as well. Hopefully everyone's having a fantastic weekend, man. Woo. All right, let's talk about the tariffs, though, because I want to get that kicked off right off the bat. It was not a surprise, man. I think the timing was maybe a surprise because we thought that, in January we would have a ruling, then it kept getting extended out. Then it started looking like it might be May or June. As it turns out, they did rule against his tariffs, which was expected. Timing, I think, maybe caught some people off guard. There's some really big implications in all of this, though. Of course, one of the things I covered a lot is that my expectation is they would have backup plans. I mean, they had even said as much. So, to no surprise, we saw Trump come out and use that backup. Is there? Oh my goodness. Okay, are we back? We're back. Okay, computer's running a little slow. What the hell, man? Let me close a couple of my applications here. Maybe that's what's causing some issues. I got a lot open. I was working on some editing. Got Premiere Pro open. That uses a lot of compute. Let me get Telegram closed. Man, I got all types of stuff open. There we go. Hopefully better. So Trump came out almost immediately and said, oh, well, we have this backup plan. We're going to impose 10% tariffs across the board. Later to come back and say, oh, now actually we're going 15%. Okay, so I think markets are just like, what the hell is going on? Are we back to this again? All this uncertainty. So here's the timeline here. This is on a Saturday, of course, just after the Supreme Court shot down his tariffs. He said that we are going to a global tariff rate of 15%. So just the day after. Of course, he made it known how he felt about all this with his tweet talking about how it's a ridiculous, poorly written, and extraordinarily anti-American decision on tariffs, blah, blah, blah. Okay. Oh, man. So this is what he used. He invoked this Section 122, the Trade of Act of 1974, which allows the president to impose tariffs up to 15%. It's important to address large and serious balance of payment deficit, which can remain in effect. So this is a key part I haven't seen anybody talk about, but these 15% tariffs can remain in effect for no longer than 150 days unless Congress authorizes an extension. This is the first time that Section 122 has been invoked. So lead up to Trump, of course, his team had this ready to go the day after the Supreme Court ruled against. It said by immediately lifting the rate from 10 to 15%, Trump maxed out the authority available under the statute. So any further increase would require a different legal mechanism or congressional action. Of course, there are a couple other statutes that he could rely on. I covered those in a prior show. So, you have no fear. He has things up his sleeve. So if he wants to put some larger tariffs out there, I'm sure he could. But regardless, I think the big problem here, guys, is that there's a lot of uncertainty. These things got shot down. There's a lot of things that could come from this. And I want to talk about a few of those things, but then going to 10%, 15%. Of course, we're already seeing reports as of today out of the EU that they may freeze the U.S. trade deal that we had already negotiated. And I think this is a sign of things that could be coming. And this is a really big problem. So in particular, Bern Lang, the chairman of the Parliament's Trade Committee, said he'll propose suspending legislative work on approving the so-called Turnberry Agreement at an emergency meeting on Monday. And I think this is the key takeaway right here. Pure customs chaos on the part of the U.S. government. Nobody can make sense of it anymore. Only unanswered questions and growing uncertainty for the EU and other U.S. trading partners. And that's exactly right. All of these trade negotiations that have taken place now, what happens if all of a sudden these countries start to back out of these agreements, given the Supreme Court ruling? And in all, there's a lot at stake here. There's been a lot of money pledged. And obviously, there are, different feelings as to how much of this money that's been pledged would actually end up getting invested in the U.S. If you look at Bloomberg and some other reputable sources, they estimate that roughly $5 trillion has been pledged to be invested in the U.S. The White House says $9.6 trillion. Regardless, this is all money that was expected to be invested in the U.S., right? That now we don't know, right? This is uncertainty. You don't want uncertainty. I mean, some assets can do well in uncertainty. I'll talk about those in a minute. But of course, for us in crypto, this is not a good thing. Now, that's not all of it. The other part that you need to be paying attention to is, are there going to be repayments issued based on the tariff revenue that's been collected? We have now companies that have lawsuits for billions of dollars open with the U.S. government saying that they, to get repaid that tariff revenue. Okay. If you're catching my drift here, more uncertainty. You also have the fact that we are expecting to collect as much as $600 billion in tariff revenue, right? So this is a big reason why the dollar started to strengthen. We saw that these countries were pledging investment in the U.S. economy. We had tariff revenue that was expected to potentially, at least, decrease our deficit, $2 trillion deficit that we're running every year. All of a sudden, there's uncertainty around all of it, okay? And my expectation in all of that would be that DXY would continue to drop. And we saw this after the tariff announcement by the Supreme Court on Friday. We saw a drastic drop in DXY. Of course, this is the measure of the strength of the dollar against a basket of other currencies. When we see this happen, and when we've seen this happen, gold and silver have done very well. And actually on Friday, I did open longs on gold and silver based on the tariff news. Unfortunately, I closed them a little bit too early. I wish I'd left them freaking open. There's a couple of reasons for that. But if you look, I mean, I opened my original longs on gold right at about $5,050, but I had a lot planned that day, and there's a lot of uncertainty that was coming out right after the announcement. They're like, "Oh, Trump's going to impose tariffs under this, statute, blah blah blah," and I'm like, I do not have time to sit here and babysit this. I'm just going to close my position. I did it at a very small profit. I wish I had left that shit open, but my plan was, hey, let's wait to see how things play out through the weekend, particularly looking at CME Open, which just happened 23 minutes ago, and looking at the New York Open tomorrow and see how markets react. 5,100 is the key level. Guys, we're there. We broke 5,100. It's held support. I really want to keep an eye over the next hour or two, following CME Open, how much strength there is here. Yeah, as well as New York Open tomorrow. It's going to be very telling. If we continue to see strength above 5,100, I will look to open another long position on gold. Silver, very frustrating because I had a really nice position open on this one. I closed it as well. The key numbers I'm looking for here, again, looking at now that we have had CME, looking at New York Open tomorrow, if we can break above 86.50, if you look back, this has been a critical level for quite some time. That is the number I'm looking at. I would look at opening along myself if we get above 86.50. If we break above 92, I will be opening a very aggressive long. If we break above and that turns into support, those are two critical levels I'm keeping an eye on for silver right now. Fortunately, I'm not looking right now to re-enter those longs unless we hit those levels. I wish I had left the long open that I had originally opened. It is what it is, man. I mean, it's about managing risk. And there's a lot of weird price action that can happen over the course of the weekend. Didn't know what to expect, with the markets opening here. So it's something I'm keeping an eye on. But I will say my sentiment around this whole tariff situation is that all this uncertainty plays well for gold and silver. I would expect that, DXY could continue to drop given all these recent developments, especially if we start to see more and more countries backing out of trade deals because of this Supreme Court ruling. None of this, in my opinion, is very good for crypto, right? We do have one thing that could counteract that. I'm going to cover those details, but there's a lot of concerns right now in the market, even above and beyond the tariff situation. We have Iran that we might be going into war with here. The other thing, of course, is the amount of insider selling. And I'm not talking about insider selling like Nancy Pelosi here. I'm talking about corporate insiders and how much they've been selling stock. We are seeing levels that we haven't seen since the COVID crash. Okay. And of course, all of these people have to disclose their trades. We're seeing smart money sell pretty aggressively. And I think there's a couple of reasons for this. By the way, retail continues buying. They're obviously not buying crypto. They're buying stocks. But I think things are feeling a little overheated, but there's also a lot of concern around the AI data center move, man. If you all remember, I covered this earlier last year. I guess it was probably in Q3, but they did an analysis on GDP growth in the US and how virtually all of our GDP growth for the first half of last year is tied to CapEx investments in AI data centers. Okay, so that's fine as long as that CapEx continues. But at some point, the big bet here is that there's going to be value derived from these AI data centers. That in and of itself is already a big bet and a risky one at that, because we don't know for sure how much value is going to come from these AI data centers. The big problem is, above and beyond that, though, is can these data centers even get turned on? Guys, the power grid is a massive problem, okay? That is something that's going to have to get addressed. And if you guys remember, late last year in December, there was a rumor that Oracle had major delays on some of their AI data center buildouts. Of course, Oracle is one of the hyperscalers, not one I would be invested in because they're leveraged out of their gills. But their shares dropped 3.6% based on a rumor, okay, that some of these AI data centers were going to be delayed. This is a $450+ billion stock. Okay, so a 3.6% move is substantial based on, again, a rumor. We're already seeing reports that some of these AI data centers out of California can't get powered on. We're seeing delays already on some just outside of Chicago here locally where I live. I think this is going to be a big problem. And it could, if this starts to spread in the news and we see more and more of this, guys, I do think that we could see a crash. I believe it's very reasonable to expect some sort of a major correction in the stock market at some point. I mean, this thing has just been grinding higher and higher. And there's just too much of a bet, in my opinion, with a little bit too much risk right now. These AI data centers are just going to get built out, turned on, and there's going to be all this value immediately. So I just don't see it. And I think for me, that's really the biggest concern. It's a big reason why we're seeing copper inventory surge to all-time highs, or the highest we've seen in decades. Is they know there's going to be copper shortages. Everyone's stockpiling copper to build out electrical infrastructure. Right? They're getting ready for this next big problem. And there are certain ways you can play it. This fund I missed. I wish I had been paying attention. This is an energy sector ETF, obviously going crazy. I mean, a very obvious long would have been when we broke this all-time high. This is looking at a weekly. So this is looking at a very long-term time frame. But when we broke this all-time high from back in 2014, obviously we've been off to the races ever since. That would have been an obvious long opportunity. This is what I'm looking at here. So this is XLE. That's one way you could potentially play the energy play this year. I talked a lot about plays around nuclear last year, solar, and natural gas. I think all of those can do quite well. Some of them have run pretty hard already, but those are ones I'm looking to get entries into and plays around those. But I think there's a big move here this year, and I think we're going to see it in the energy plays. Obviously, last year we saw a lot of gold and silver run up. I'm still planning on trading gold and silver, both shorting and longing when the opportunities are there. But energy, I think, is a massive play. What about in crypto, though? Man, I think something like Akash Network can actually do quite well. Sorry, I was just frozen there for a second. I think Akash Network is actually set up to take advantage of this in some of these decentralized GPU projects. We had Treasury Secretary Scott Bessent come out in August of last year talking about how we need to rely on decentralized compute using blockchain technology. There's a couple of reasons why I think Akash is well positioned. For one, if we start to see this power issue, hit the headlines, there's going to be a lot of talk about accessing and utilizing edge compute and compute that's already there. Well, these projects are tapping into that. We're seeing a lot of shift to inferencing versus training, which a lot of these networks can be used for. Additionally, Akash is tapping into, with a lot of their hackathons, the AI agent move. And when I talk about ETH Denver, that's going to be a big topic here. I think the AI agents, and you look at power, right, and the power capacity, those two converging here with something like Akash does position it very well, in my opinion. And you're sitting here at 31 cents. Obviously, the market cap is not low by any means at 90 million, but it is well off of all-time highs. I mean, we've seen this coin in particular move up a lot. In the past, it's been mostly off hype. If you look at their revenue trajectory, they are not only growing their revenue, but they also are introducing a burn to mint equilibrium. It's going to give a lot of utility to their tokens. So this is one that I'm keeping a very close eye on that I think could play well this year. Nosana is another one, obviously. A little bit of a lower market cap, sitting here at $8 million now. So this is well off where they were. You have IONET's another one. They had a little bit of a weird situation when they first launched their token, with their CEO having a bit of a checkered past. Just remember, who was it that called them out? Oh, man, it was Martin, right? I think it was Martin. Either way, they have pivoted. They have new leadership, and they seem to be doing the right things. They also changed their tokenomics recently. So sitting at 31 million. So those are a few that I think could play well as you see more emphasis on the power grid and access to compute for AI agents really bursting onto the scene this year. Those are all, in my opinion, ones that could bounce back in a big way. So all things that are on my radar. Let's see what comments we got in here. You go to a Trump midterms rally. Oh, God. Oh, man. Can I cover local politics? Oh, there's all these rumors. It's looking like it might actually happen about the Bears going to Indiana. Yuck. What is that about? Mamdani. New York's about to get hit with a crazy blizzard. Are you guys paying attention to that? Woof. We got Bobby in the house. Oh, how's it going, Bobby? How much crypto do you own? That's for me to know, but a good amount. A good amount. I've got a well-rounded portfolio. I mean, I have some real estate investments. I've got my traditional retirement accounts. So I've got a couple different platforms for the retirement accounts, and obviously my crypto holdings, which, gosh, I have stuff all over the damn place. But unfortunately, you kind of have to with some of the plays that we get into here, especially some of the small caps. You know, they only have so much availability. All right. Let's get into the big news, though, for crypto. And this is something that could be pretty massive, actually. And this is this SEC's 2% haircut on stablecoins is a bigger deal than it sounds. It's from Forbes. It came out just a few days ago. So on February 19th, the SEC's Division of Trading and Markets issued a new FAQ clarifying how broker-dealers should treat payment stablecoins under the net capital rule. Okay. So it says under Exchange Act Rule 1 or 15C3-1, broker-dealers must maintain minimum net capital, or stated more clearly, liquidity cushion to protect customers if the firm gets into trouble. When calculating that cushion, the firm must apply haircuts to different assets on its books, reducing their counted value to reflect risk. So riskier or more volatile assets get larger haircuts while cash gets zero. Okay, so until now, this is the big one. Some broker-dealers, I'd say many, were self-imposing 100% haircut on stablecoins, meaning those holdings counted for nothing in their capital calculations. In other words, they are treating stablecoins about the most risky asset you could possibly have. And so as a result, that made holding stablecoins cost prohibitive and therefore financially untenable for regulated intermediaries. This is a big change now. So they're going from 100% to a 2% haircut. So very drastically different, going from treating stablecoins as one of the most risky holdings to one of the least risky holdings. Says that this haircut changes that calculus entirely by putting stablecoins on par with money market funds, which hold similar underlying assets like U.S. Treasuries, cash, and short-term government securities. The reserve requirements for permitted stable. This is actually interesting, and I agree, but says, as Pierce noted with SEC, the reserve requirements for permitted stablecoin issuers under the Genius Act are actually more restrictive than the eligible security requirements for registered money market funds, including government market money market funds. 100% in her view was unnecessarily punitive. So this is true. You know, stablecoin issuers under the Genius Act have to hold treasuries at like 1-to-1 ratio. You look at our banks, for example, that use fractional reserves. They actually have 0% reserve requirement. So, you know, you put money in the bank and they're lending it out. They have no requirements to have fractional reserves anymore. That rule changed in March of 2020. So the stablecoin issues are actually under more scrutiny and actually are required to have a lot more backing in the form of mostly treasury bills for all of the stablecoins that they brought on chain. So she's basically saying it made no sense to treat them as more risky than these other asset classes. And I would have to agree. So what does that all mean? Well, gives an example here. So, for example, a $1 billion stablecoin position now only requires 20 million in capital reserves instead of 1 billion. Okay, so in the past, they'd have to have $1 billion in capital reserves to back the $1 billion in stablecoin position. So this drastically improves capital efficiency and liquidity for firms. And the big takeaways here: boosted demand from institutional adoption, enhanced liquidity and market confidence. So these are all really good things for the crypto markets. And we can expect there's going to be a lot more stablecoins coming on chain, a lot of new issuance from these stablecoin issuers. So this is a huge change. So when I mentioned, there's the potential this could be a really big catalyst. The question I have is, will this news offset the uncertainty around the tariff situation? I don't know. I'm not convinced. In particular, I think Bitcoin obviously traditionally leads the way. The key levels here, I would say 72,000 and 74,000 for me personally. Okay. 74,000 is really the key level though, because 72 would put us back in a breaking out of a downtrend, but 74 is the level that was broken right after Trump was elected. It was also the level that was retested after he originally had this tariff announcement. So this has been a key level for quite some time. Once we broke below that is when we were absolutely dead. But if we break above 72, that would put us back in or bring us out of the downtrend that we've been in. So that's obviously huge for market structure. The other part, though, of course, is that 74,000 number. So those are the critical ones I'm looking at. Other than that, man, my base case is still chopping and probably further downside, especially if we see like the Iran war situation get worse, right? If we start to see more countries say that they're backing out of these trade agreements, that's not good for risk on assets. I mean, that's just the bottom line. So until we see something otherwise in the charts, that's my base case. So long gold and silver, especially if we see strength out of the New York Open tomorrow, gold holding around above 5,100. Obviously, the key level is 86.50 and 92 on silver. Those are the positions I'm really looking at right now to play. Crypto, man, I'm going to wait to see how this plays out. But it just, to me, feels like we have more downside or chopping before we see a resumption in upward price action. I hope I'm wrong, guys. I do hope I'm wrong. But doesn't mean that there's not plays to be made in the interim. And I want to talk about those plays because I've been doing quite well, actually printing on some of the plays I've been in, stuff I've covered. But I have to say, after ETH Denver, I have even more confidence in some of those plays. But I do want to give a shout out to some of the people I was able to meet at the conference, because I would say for me, and I led off with this, ETH Denver was very worthwhile for me. I know there's different views I've seen. Some people were very disappointed in ETH Denver. I'm speaking about my experience as a whole, not necessarily just the ETH Denver conference itself. But for me, I went in. Let me pull this down real quick. I think a lot of it has to do with what your expectations were and how you used your time there. My expectations were that attendance would be low. I mean, the market right now, market conditions are freaking abysmal, right? After October 10th, it's just been downward and terrible. I didn't expect there to be a huge turnout. Okay, so that was, kind of my expectation going in. And I have to say that the turnout wasn't necessarily great. There weren't a lot of, there were plenty of boosts there, but there could have been a lot more, and this is my first time going to ETH Denver. I've been to other crypto conferences. I think they could have filled out the space a little bit better. But keep in mind, I think a lot of these projects, and rightfully so, are watching their spending right now. I think the base case for a lot of them is that we're in a bear market and they want to make sure they have runway. They're running a business. I get it, right? But I've seen some people that thought maybe they could have lowered the price for vendors to be there. I'm not saying that's wrong by any means. That is potentially something they could have done. But for me, I didn't spend a ton of time at the conference. I did a lot of side events. I had specific sessions I wanted to go to. I was very intentional about which ones I wanted to attend, and I attended some really awesome sessions, man. And I think, there's a few projects I came across that were great, and I think the main topics, I would say, number one, stablecoin payments and financial rails. Okay, that was a big one. Obviously, Ethereum has been where a lot of that has been taking place. Number two, AI agents, man. This is going to be the year of AI agents. We saw a little bit of that with virtuals about a year ago, but none of them were actually doing real shit. Now they are actually doing real shit. Like some of these that I'm going to cover in the show today, I've been covering for a little while that are just popping off right now. And I think there's going to be a lot of opportunity there. And then the third, I would say with robotics, there is a fair amount of emphasis around robotics. I mean, I obviously went to those sessions on purpose, but those were really the three main takeaways for me. And a lot of great side events, man. And there were some good sessions at the conference as well. But I think my biggest takeaway was the networking I was able to do. That was, I think, the most worthwhile purpose for me to go. I network with a lot of great people. A lot of people, some that I work with very regularly and from a virtual perspective, but also some new faces. And in a space where there's just so many grifters, it was nice to meet some real people that are building, that are, trying to do the right things, have been very successful in building out their platforms. And I had a really good time meeting with a lot of these people. So I want to give a shout out to some of them. Liz. So, I'm on her spaces throughout the week. Got to spend a lot of time with Liz, man. And it was freaking awesome. Liz is a real one. We have Slick Rick in here. Let me get this moved over. Man, I'm like freezing up here when I'm sharing new tabs. I don't know what's going on. But Slick Rick was awesome to meet with him. Spent a lot of time with him and Liz. So excited to get on the spaces with them now that I can put a face. We got Danielle. I met Danielle as well. Let's see here. We had quite a few people here. I spent a lot of time with Crypto Empress. She's freaking awesome, man. We had a lot of fun and met Ben Crypto, Finance Freeman. That dude is a stud. Talked a lot about finance, got in the weeds with him. We have Scott Martin. So it was really awesome, man. Met a lot of people. Crypto Kate too. Give her a shout out. I know she responded to my announcement earlier. I was going on a live stream. And then, of course, we have Unleashing Deepen. We had Tyler. I actually stayed with Tyler out there. He's got a place out there. So that was really cool to meet him for the first time. Other notable mentions, met Sky. She's a real one as well. And then we also had Rachel with On-Chain Media. So, man, I'll tell you, I met a lot of really great people. And these are all like genuine people that are doing real things in the space. So it's really cool. And I intentionally spent time with certain people, so for me, and again, I know people had mixed feelings about the conference itself. I got what I wanted out of the conference. I got to go to some really cool sessions. I learned a lot and I met some amazing people. So worthwhile trip for me. I think it's going to pay dividends too down the road. So that's very exciting. Let's see here. But let's talk about my main takeaways and how we can make money off of this, because that's what a lot of people want, right? I thought Jesse Pollock had a really good take on the conference. So he came. I don't think he was necessarily guaranteed to come, and I just happened to be at the main stage when he got on stage, and it was really freaking cool. I'm going to tell you why. There's some main takeaways on some of the AI agents we've been talking about here. But he said, leaving Denver, and my primary feeling is it's a builder's market. The event was smaller than past years, no doubt about that. But every person I talked to is locked in, feeling like the technology is ready and our time is now. So one theme we've talked about a lot about bringing builders to crypto, but it feels increasingly like we need to do the reverse, bring crypto to builders and solve their real problems with it. Crypto is now the most powerful platform in the world for doing payments, trading, issuance, and anything else with money. We are starting to see the show up as a massive unlock across businesses, big and small, to lower costs, increase efficiency, and unlock novel new markets. And I won't bore you with the rest, but he just said, let's lock in and build. He does talk about agents there. And I will say, in his speaking engagement, he talked about Austin and Kelly Claude on stage. They're asking him, like, which agents are you seeing? Like, what are some of the use cases you're seeing around agents? He called out Austin and Kelly Claude. So this is one, guys, I've been covering for quite a while. sitting at right around, looks like just under a $10 million market cap right now. But I've been covering this for about the last month. I think when I originally covered it was probably around a $3 million market cap. So this thing has done quite well. I think the market's still figuring this out. So this, I mean, I'll give you the recipe for what I'm looking for in these AI agents, because virtuals, you can get some flips there, but to me, it just still right now at least feels like it's a lot of meme coin AI agents that people are flipping that aren't necessarily doing real stuff. I think that could change. Don't get me wrong, but these ones in particular are building real things. So Kelly Claude, of course, this is the one that was mentioned by Jesse Pollock on stage. This is one that I've been covering a lot with you guys. Here are the key components. Web 2 builder, huge following. This guy just under 450,000 followers. Okay. Doxed Web 2 builder. Building real things. This thing is generating revenue. So they've got a flywheel effect with the token as it generates revenue. Okay. So right now, sitting at under $10 million market cap, I believe Kelly Claude could be one of those ones looking back that goes off, frankly. Another one is Felix. Now, I've talked about this one a lot. I found this post. Guess who reposted it? Jesse. Okay. So again, these are both on his radar. Same situation. Okay, so here's the X page here. Web 2 builder, fully doxed. Okay, he's got 87,000 followers. I watched an interview with him earlier. So he just released a video interviewed by this guy, Peter Yang, who he himself has 177,000 followers. They talk about Felix, and this was posted earlier on his YouTube channel, which I did watch all of it, and it has already 19,000 views in 9 hours, guys. Okay, so these are AI agents that, in my opinion, are majorly flying under the radar. The other thing is they built out a dashboard for Felix. Over almost $21,000 in revenue so far, but look at the trajectory, hitting $5,000 today. So Felix is continuing to build out businesses that generate revenue. Okay, this is an AI agent doing all this. And as they get revenue and he acquires tokens, he burns them from that revenue. If we look at the chart here, this is one that I've been covering with you all since 300,000 market cap. It's done about a 10x, and it's only still at a $2.72 million market cap. So yes, it's done a 10x since I started covering with you all, but I believe that there could be a lot more upside here still. When you look at the fact that it's getting attention on these large YouTube channels, getting reposted by Jesse Pollock, you look at the revenue trajectory. I mean, this is insane, and it has a flywheel effect with its token. Y'all, like the market, I don't think has figured this shit out, and that is why I have bags in these, and they're crushing it. I mean, they're doing really, really well. It's really cool to go to the event, see Jesse Pollock with Base talk about these things that I've been covering on the live streams with you all from the early stages, man. A couple of other ones that are on my radar that are lower cap that could potentially be entries here. I'll share with you all. OSO is one that is built by a MetaMask dev. In particular, here's the X page for OSOBot. Here's the dev. And this is something that he's talking about that I think is really important. And that is the ERC 7710. Okay, so he talks about, as these agents have access to wallets and are spending money on chain, says don't give agents your credit card, private key, if you're going to give them scoped permissions. And this is what he's working on. By the way, a lot of his posts have also had interaction with Wallet Connect's CEO. And this is a dev from MetaMask. It says define what they can spend, where, and how much, revoke any time. The agent economy needs guardrails, not blank checks. And that's absolutely right. In fact, a lot of the sessions I attended for AI agents talked about this exact problem. And this is something that's being worked on right now with this MetaMask dev who has launched this AI agent. Of course, sitting at 345,000. Okay, so that's a pretty low cap. So we'll see where this one goes. And I'll give you one other one. Oh, wait, sorry, before we move to that. I don't know if y'all saw this. And this got it. I thought it was pertinent. So someone asked an AI agent for money in the replies, in the comments under one of their posts, and the agent transferred him 250 grand. It says most profitable reply guy ever. Insane. So I think it just goes to show we need to have scope when we give permissions to these AI agents for how they're going to spend the crypto in their wallets. And if this isn't a good enough example, I don't know what is, but that is freaking nuts. Talk about, can you imagine if all of a sudden you like replied to an AI agent and you check your wallet, next thing you have 250 grand in there? That's crazy. One other one notable, I'd say, is Atlas Forge. I've brought this one up before, but this one is still a newer one. And I bring up this one and the other one Osos because because they are lower cap. So 196,000, definitely a lower market cap. You can see this one's been getting a lot of followers. And again, the same recipe, a doxed Web 2 dev. Okay, so this guy, Johnny Miller, this one's creating artwork and sending some of it. It's creating artwork for other AI agents. They have right now a mint actually that you can get in on if you are a token holder. So it's all like this generative art. So it's an interesting one. But it follows the same theme on these other ones that have gone off for me that I've done very well on and seen like 10Xs or better. So these ones are low enough cap that I feel, I feel comfortable entering at these levels. The other ones that have run like Felix up at, $3 million market cap. Now, I think it can go a lot higher, but I'm waiting to see a pullback before I'd add to a position there myself. Okay, but these are four that I want to get on your radar to at least be looking at. Okay, so you can follow along. But I think the AI agent is something you cannot fade right now, man. Like there is so much talk. I'd say like 60% of the sessions I went to at ETH Denver was about AI agents and how to utilize them. So finding real ones. And after watching, by the way, the interview with Nat, the Felix dev, some of the shit that dude's doing to make these things work, like you have to have a dev that knows what they're doing, and like all of these do. Some of the virtuals ones that are just like launching, I don't see how they're anything more than a flip at this point myself. Maybe I'm wrong. I don't know, but that's how I'm looking at it at least. All right. Let's see here. Where's my freaking... Oh, okay, here we go. A couple deep in plays that talk to the team. New ones that I haven't covered, so I want to get on your guys' radar here. Where's my share? Am I good? Yeah, I'm sharing. The world has gone mad. It has, man. When you have 250K being sent by being a reply guy from your AI agent. Yes, the world has gone mad. Let's build an AI agent for deep in. There is virtuals deep in, baby, but again, I mean, the virtuals ecosystem to me, you can make money on them, don't get me wrong. Like there's been a couple I bought 2 weeks ago, a week ago. Basically, if there's on-chain evidence that the virtuals team may have created it, that's enough for these things to run. I've hit like 16x on a couple. So there's a possibility for trades from the virtuals ecosystem, but I'm not looking at them right now, at least as long-term holds. The ones I just covered are ones that I'd be comfortable holding a little bit longer to see how they play out. But let's talk about Spexy. So Spexy is a drone project, deep in project. Right now, they're actually paying in US dollars for drone pilots to go collect imagery. And they're using that imagery to create something called an orthomosaic. So essentially, you fly in a grid pattern. There's software that stitches that imagery together and creates a very high resolution image with very precise location data. I worked in the drone space in a prior life when I lived in DC. So I know a lot about this stuff. And what they're doing is pretty cool. Now, they haven't launched their token yet. They are partnered with GeoNet as well. I actually got dinner with Mike Horton while I was out there and went over to this event with him. Spexy had a happy hour, and it was pretty cool. Their CEO's pretty sharp, man. And I like that they're being very thoughtful on their token launch. So I was talking to their CEO about it, and he's talking about GeoNet's tokenomics and some of the mistakes we've seen with other projects. And I think they're going to basically structure their tokenomics in a way that brings a lot of value to the token. And they have the opportunity to have a lot of revenue, man. They have some pretty big contracts in their pipeline right now. So projections range pretty wildly, but I could see this be a pretty successful project potentially. The other one that does have a token today is Glow. Okay, so Glow is an interesting one. They are basically funding solar projects, but solar farms. So on a little bit on the larger scale. They are, looking at projects that, if they went to the bank and they're on the gray area of penciling and the bank may not give them funding, they step in and give them kind of a bridge to get that project across the finish line. And they found a way to really monetize that, and they're doing quite well. It's also notable. You all know I'm huge on founders and the team. David Vorik is the CEO, guys. So he's an OG Bitcoin investor. Was also a co-founder of SIA. He's a knowledgeable guy. I'll say I sat down with him for quite a while. He is sharp, man. So I think this project has a lot of potential. I think it's very much under the radar right now, and especially with some of the newer developments, like they've really hit they've hit a lot of momentum recently. Let me pull up their token real quick. This is one that I actually do want to add a position to. I haven't found a project in quite some time that I wanted to a new project, at least, that I wanted to add a position to. Let's see here. I'm trying to find it on CoinGecko. That's GLW. Okay. What the hell? Where is it? Huh. Having trouble finding this project on CoinGecko. I wonder if they're on there. Maybe they're on. Maybe they're on CoinMarketCap. I'll have to find this token. I'll cover it in the live stream this week. It's sitting at like a $6.5 million market cap, though. And I was looking at some of their metrics with David, and I'm like, holy shit, man. So this is one that I do want to get a position into. He said not widely indexed. Yeah, it's still an early stage project, but man, guys, they have the team, they have the product market fit, and they have the growth trajectory they're on right now is pretty insane. They've got some very interesting things they're doing with their tokenomics too. I need to follow David. So this is one that is certainly on my radar. I'm going to look more into the token itself so I can pull it up for you guys on a stream this week. But this one that I would say get on your radar. I think there's a lot of freaking upside here. You're seeing a lot of move into the infra fi. And I think this is kind of I'd say a crossover between DePIN and InfraFi. We're seeing a lot of that. 375 AI is another one that's kind of doing something similar there. So I would say that is one. Yes, they focus on carbon credits, 100%. Y'all, it is a good. In my opinion, based on what I've seen, it is something that I think is mispriced. I've talked about the ones that I think are mispriced. Aoki was one of those as well. It's been up like 100% in the last week. So Aoki's been running like crazy. It got down to 3.7. So it's actually up almost 200% since the bottom there. Solentia is another one I've been talking about for quite a while. I think they're up like 25% in the last day. So there are a number of these projects, man, that even when the market's down, I think alts have been beat down so badly. If you can find the right ones, especially ones that are showing strength right now in this last week or two, some of them have really been moving up. When the market starts to recover, those are the ones that, in my opinion, will do really, really well. And if you can find these like under a $10 million market cap, that's where you make a lot of fucking money. Okay. That's where in 2022 and 2023, when I invested in those types of projects, those are the ones that I got crazy returns on and made most of my money in 2024, in the space. And that's kind of the recipe you look for, that I look for, and that's worked out really well for me. I don't see any reason why that wouldn't be the case moving forward. I do want to bring up ETH real quick, because I know that's one that I've been getting a lot of questions about, and I want to give you my thoughts here, because we've seen quite a range. I've been adding when we get into like the 1.2 to 1.4 cent range. This is still a situation, in my opinion, where it's not even listed on freaking CoinGecko anymore. For Bitmart, rather. There's an exchange that has been running this thing down, and I want to tell you what I've been looking for to change here. So let me share this tab. So in particular, we have this Bitmart. Look at the 3 stars here. Okay. So essentially that is because the price is so decoupled from everything else. You see down here, significantly differs from the cryptocurrency's price, excluded from overall price and volume calculation. We continue to see this crazy volume on this exchange. There's somebody arbitraging it. So the things I'm looking for right now are, does this volume drop? Does it get delisted? Or does the liquidity improve to where they can no longer arbitrage? It's at a 1 right now. That's horrible. Any one of those 3 events, a delisting, a decrease in volume, or an increase in liquidity, that is when I'm going to look to ape into this even heavier, because I believe that is when the bottom will be in, once they can close that loop. Until then, until that happens, I'm continuing to get my DCA price in, and we get to that 1.2 to 1.4. We were even down all the way down to like 1 or 0.008 the other day. So this is one of those situations where I think there's this weird arbitrage taking place that's affording generational entries here. These are the market cap sitting at $3 million. That's fucking stupid. Are you kidding me? Like, these are the types of projects with the team they have and the product market fit that they have. That is a steal. You don't even have to believe in the project that much, guys. This is a joke of a market cap. Silencia is the same way. You look at their market cap and what they're doing. People can be like, oh, well, I don't know if they're going to get to the $15 million a month that they're saying. It doesn't matter, y'all. Like, they don't have to get to 15 million a month. This shit's sitting at a $2.3 million market cap. Are you kidding me? Like, it's crazy to me. People don't kind of connect the dots there. Like, you don't need them to get to $100 million in revenue, which is actually, I think, possible in this next year with the things they're doing. They get a couple small contracts. They already have some contracts, but a couple small ones, and they're going to exceed their revenue, exceed their market cap. That's the beauty of these downtimes, is you can find these types of plays. Once the market takes off again, y'all, these prices won't be here anymore. So obviously you don't want to, catch a falling knife. And in my opinion, DCA is the way, and knowing that you have to have patience here for the market to turn around. But, once things are moving back up again, that's when you look back and you're like, oh, that's generational entry. Like, Honey, remember, it was at like a penny. That thing did a 34x. Yeah, I built out a huge fleet and I did very, very well. But I wish I just bought a shit ton of the token when I was down there, man. No Sana, 350x. I wish I just bought way more of the token. I bought a decent amount, but I wish I had bought way more. And that's how I'm looking at these opportunities right now. While everyone's afraid to enter the market, I'm looking for these types of opportunities. So, y'all, that is the dealio, man. I feel like a year ago from where I was to where I am now, I'm like so excited because now I've learned a little bit, just enough TA. I'm not like getting complicated with it. I'm looking at Brandon, obviously Brandon Hong, who that guy has been the best trader of anyone I've seen across crypto over the last year. He's got a pretty simple system. So I've been dialing in on that. It's worked out very well. Shorting the majors or longing the majors based on what the market, what's going on in the market. All the macro research I did last year, I'm now putting that into action with a lot of these trades on gold, silver, Bitcoin, Ethereum, Solana. Done very well with those, both longing and shorting. Obviously, we have the AI agent situation going on. So I think for me, I'm always looking at what's the leading narrative right now. How can I leverage that and make money on that as well? And then lastly, the deep inside of things, looking at some of these hidden gems, man, knowing that to have the patience to wait for things to recover. But I think a lot of these are going to do really, really well when the market rebounds. So building up those positions. So taking a very well-rounded approach to everything. Very excited for 2026. And for all the people that I've met at ETH Denver, guys, it was awesome. So good to connect with everyone. The networking was fantastic. And that's what I got, y'all. What do you say about, what do I say about people who believe we've yet to see a true bull market in alt season? Are you talking about this current market cycle that we're in? I think we have. I think people need to reset expectations on what alt season is. I think we saw. I mean, I think we saw alt season if you're in the right alts in 2024. I mentioned a few, like some of the deep in plays, like it was a short run up, but Highmapper did a 34x. Nosana did a 350x. We had Demo do a 15x, right? We saw meme coins go crazy. I think we saw an alt season, just not like we've seen in the past, but I don't think we're going to see a 2020, 2021 alt season again. I think those days of just the shotgun approach, if you're going to try to be lazy and just put money in and just expect everything to go up, I think you're going to be in for a world of hurt, man, frankly. But I think for those that are doing the research and really dialed into what's going on in the market, I think you can still make a lot of money, man. So that is my opinion. I think we did see a bull run. All the people that are saying we haven't seen a bull run, I'm like, what are you looking at? Because Bitcoin got down to like 17K in the last bear market. It got up to $126,000. Like, what do you mean we didn't have a bull run? That's crazy. Ethereum, I obviously didn't perform extremely well, but that got up to was like five grand or just under. We saw Solana get up to $295. Obviously, all of these were running back up until October 10th, but it should happen, man. Like at this point, we have the market we have. Obviously the fallout from that was going to be huge. I think we've seen a lot of damage from that. But at the same time, you can look at the silver lining there. Like I think it's given us a lot of really good opportunities for entry points into some of these promising projects. Don't buy bullshit. Like buy the real projects with real teams that have runway and product market fit. In my opinion, haven't had their big moment yet. And all the dilution. I think there's a recipe there that you can get crazy returns still. So that's my sentiment, man. Oh, Joe agrees. So I don't know, man. I'm dialing in. I'm excited coming back from ETH Denver, like after meeting the people I got to meet and seeing the stuff that's being built. And I actually didn't think it was so bad that the attendance was a little bit lower and there are less vendors, because there was a lot of like true builders there. Like there wasn't like the fluff, I've seen at some of these other crypto events. Like it was a little bit watered down, but I mean, it was people that were there to do real things, like I think that's healthy for the space. So very excited looking forward. And that's what I got for you guys. It is. Damn, we've been on for a while, about an hour. I'll be on. I'm back home in Chicago. I'll be on throughout the week with you all. I'm really, based on some feedback I got, I have my X Spaces every Tuesday. I'm going to start getting those on other podcast platforms. There's a lot of people I talk to that are like, we don't really do X Spaces. Like, okay, I need to get on more platforms. So I'm going to do that to try to get my reach out a little bit. And a couple founder interviews I'll get posted here likely this week. So how much did tickets cost? It was free, brother. ETH Denver is free. I got to stay with Tyler. I used my Southwest point seat out there. And if you do it right, you've got side events everywhere. You can get free food and drinks, man. So it was actually a pretty low cost event, really. But it was definitely worth it. All right, y'all. I will catch you on the flip side. Have a fantastic Sunday evening, and we'll see you all this week. Peace.